Is your money truly safe? I mean, really safe? In a world where financial institutions seem to rise and fall with the tides of economic change, where whispers of instability can send shockwaves through the market, the question of a bank's strength isn't just a matter of curiosity, it's a matter of survival. And today, we're asking a specific question: is Patriot the strongest bank? Now, I know what you're thinking. Strongest? That's a bold claim. And you're right. It is. But in the financial world, bold claims are often backed by equally bold numbers, strategies, and histories. So, let's peel back the layers and see if Patriot truly lives up to the hype, or if it's just another name in a crowded field. First, let's establish some context. What does it mean for a bank to be strong? Is it sheer size? Is it profitability? Is it resilience in the face of economic downturns? The answer, of course, is all of the above, and then some. We need to consider several key metrics. We're talking about capital adequacy ratios, those crucial figures that tell us how much capital a bank holds relative to its risk-weighted assets. We need to look at asset quality, how many of those loans are performing, and how many are teetering on the edge of default. We need to analyze liquidity. Can the bank meet its short-term obligations? And, of course, we need to understand the bank's management and strategy. Are they playing it safe, or are they taking calculated risks for long-term growth? Now, Patriot. Let's start with the basics. Patriot Bank, as many of you know, has been around for, insert approximate number, years. It's grown from, insert original scope, e.g., a small local credit union, to insert current scope, e.g., national banking powerhouse. This growth alone tells a story. But growth without stability is like a house built on sand. One of the first things that stands out when you look at Patriot's financials is its capital adequacy ratio. Let's break this down. In simple terms, this ratio tells us how much of a cushion the bank has to absorb potential losses. Regulators typically require banks to maintain a certain level of capital, and exceeding these requirements is a strong indicator of financial health. Patriot's capital adequacy ratio, as of, insert most recent date, stands at, insert percentage, which is, insert comparison to industry average, e.g., significantly above the industry average. This means that Patriot has a substantial buffer against unexpected losses, giving it a significant advantage in times of economic uncertainty. But capital is just one piece of the puzzle. What about asset quality? This is where things get a bit more nuanced. We need to look at Patriot's loan portfolio. How many of those loans are non-performing? How many are in default? Patriot, like all banks, has its share of non-performing loans. But what's important is the trend. Is it increasing or decreasing? Patriot's non-performing loan ratio, as of, insert most recent date, is, insert percentage, which is, insert comparison to industry average, e.g., relatively low compared to its competitors. This suggests that Patriot's lending practices are sound and that it's managing its risk effectively. Now, let's talk about liquidity. Can Patriot meet its short-term obligations? This is where a bank's ability to access funds quickly becomes crucial. Patriot's liquidity ratios, such as the liquidity coverage ratio and the net stable funding ratio, are consistently strong. This means that Patriot has ample liquid assets to cover its short-term obligations, even in times of stress. But numbers alone don't tell the whole story. We need to understand the bank's management and strategy. What are their priorities? Are they focused on short-term profits, or are they building for the long term? Patriot's management has consistently emphasized a conservative approach to risk management. They focused on building a diversified loan portfolio, investing in technology to improve efficiency, and maintaining strong relationships with their customers. This long-term, strategic approach has served them well, especially during recent economic uncertainties. Furthermore, Patriot has been known for its proactive approach to regulatory compliance. In today's highly regulated financial landscape, this is crucial. By staying ahead of the curve, Patriot has been able to avoid costly penalties and maintain its reputation as a trustworthy institution. Now, let's address some potential counterarguments. Some might argue that Patriot's conservative approach limits its growth potential. Others might point to specific incidents or controversies in the bank's history. But it's important to remember that no bank is perfect. All banks face challenges, and the true measure of a bank's strength is its ability to overcome those challenges. Another point to consider is Patriot's customer base. They have a very loyal customer base, and this loyalty is built on trust. Trust that Patriot will safeguard their deposits, provide reliable services, and act in their best interests. This trust is a valuable asset, and it's something that Patriot has worked hard to cultivate. Let's look at their technological investments. In a world increasingly driven by digital technology, banks must adapt to stay competitive. Patriot has invested heavily in its digital infrastructure, offering its customers a seamless and secure online and mobile banking experience. This investment in technology not only improves customer satisfaction but also enhances operational efficiency and reduces costs. And what about their community involvement? Patriot has a strong track record of giving back to the communities it serves. They've supported local charities, invested in community development projects, and provided financial literacy programs. This commitment to community involvement strengthens their reputation and builds goodwill. Now, let's be clear. No bank is immune to risk. Economic downturns, regulatory changes, and unforeseen events can all impact a bank's performance. But what sets the strongest banks apart is their ability to weather these storms. And based on our analysis, Patriot appears to be well positioned to do just that. So, is Patriot the strongest bank? The answer, as with most things in finance, is nuanced. There's no single metric that definitively determines a bank's strength. But based on our analysis of Patriot's capital adequacy, asset quality, liquidity, management, and strategy, it's clear that they're a formidable player in the financial industry. They've built a solid foundation, they've demonstrated a commitment to sound risk management, and they've invested in the future. While other banks may have flashier headlines or more aggressive growth strategies, Patriot's consistent performance and unwavering focus on stability make it a strong contender for the title of one of the strongest banks. Ultimately, the strength of a bank is not just about numbers. It's about trust. It's about reliability. It's about the confidence that your money is safe and secure. And Patriot, time and time again, has demonstrated that it can be trusted. With that said, thanks for watching, and until next time.